Okay, so hope everyone is well. I just wanted to do a quick update on the Brexit situation. It's obviously been what was expected to be about a week ago, quite a big pivotal event for the course of Britain's negotiation with Europe in the context of what the outcome would be going forward. Potential for volatility, but that has, as you know, been averted because a transitional deal has been secured, in short, and also market focus has very much been elsewhere, and that's been firm and squarely on US President Donald Trump and this whole trade tariff targeting of China in particular, but also a variety of other countries who've then gone to the WTO suggesting that this is unfair treatment, and they've kind of raised the question of this being investigated and so on and so forth. The biggest fear obviously being retaliation effects. We've seen that already from China overnight, which has obviously been something which has dampened market sentiment in the second half of this week. That in combination with weakness in the tech sector certainly has been a prevalent theme that's seen US equity markets underperform. But just quickly, Brexit, what is the deal? I've had a few questions, so just to summarise, first of all, let's look at the news, and this is really it. EU leaders agree to Brexit transition. So remember, really, today's meeting, it was almost if it hasn't even existed, because basically, apparently, having read into it and monitored the situation, all of the politicians in Europe basically turned up, took 5 minutes, signed the deal, and it was done. So good news for Theresa May. Obviously, this was a real risk to her leadership of the existing working majority government, that is the Conservatives and the DUP, and that risk has been averted, at least for the time being. The Irish issue kind of still on the table. This is one of the things that really hasn't been rectified as yet, but reassurances have been given, and now the next deadline is kind of June for the next scheduled EU summit. So what exactly has happened? Well, today in Brussels, European Council in the other 27 EU countries took a matter of minutes then to sign off a 21-month transitional period, and basically means we're going to stay within the single market. The transition period doesn't actually start until Brexit Day, which obviously is March 29th of next year, so approximately a year from now, and the transitional deal will last until the end of 2020, so as what had been tabled before. The talks on the new deal include a proposed free trade agreement will begin soon, but Brussels does not expect detailed negotiations to start until Britain has firmly become a kind of third country after the official elapse, if you like, of Article 50. The transitional deal, though, of course, is contingent on the fact that Theresa May has agreed to pay the exit bill or the divorce settlement fee, and that's going to be circa 35 to 39 billion sterling, and how it kind of sits at the moment. The next phase of talks, though, obviously is still going to focus on Ireland. Now, the reason why that hasn't been a kind of an issue that sculpted the entire deal at this particular point in time is because Mrs May's promised to agree a backstop plan to ensure that there is no reintroduction of a hard border between Northern Ireland and the Republic. So that's kind of eased investors' attentions. The other thing, of course, is that Theresa May was supposed to come back to London yesterday, but she stayed because now she and all the other European partners are having meetings to discuss particularly the issue of the US administration and its new push on US trade measures, which have been highly aggressive from Donald Trump and his team. So if anything, this kind of very protectionist stance and aggressive posturing on the trade front from Trump has almost united Britain with Europe in this sense, and we've kind of got the opposite effect. So that's what's been going on. Let's have a look quickly at the cable chart, because there's been a lot of sterling news this week, and I just want to give you a quick update. Here's a chart that I marked up earlier, and really it's going to be from the center of the chart going right from where I've marked this up with various comments. That's the week. So the week started, basically here, going to the right hand side. So first off, I just wanted to give a brief explanation about the way of which markets react to news. Don't forget, today's financial market prices of assets are based on forward-looking expectations. At the beginning of the week, the big thing, the big risk for the pound was a lot of uncertainty about can they get this transitional deal secured or not. Now, what you had on Monday here, this is when you are, as an intraday trader, monitoring news wires very closely. You're keeping an eye on social media for any tweets from journalists on the scene or who have been speaking to people behind closed door meetings and so on and so forth. And this is quite typical of what would normally happen. If you actually look at the move that happened on Monday and then you look at the move that's happened today, the move on Monday is about 3 or 4 times larger. That's because the market then, having had the press conference at the top of this move, then confirmed from Michel Barnier and also David Davis, the Brexit minister, it's pretty much a done deal. They agreed it in principle. Today was basically just signing it off, so to speak. In the interim period, we have had some quite interesting bouts of volatility, and some certainly have played in favour of the pound. One being here, this is when we had the UK release of the wage data. And as you know, the wage data has seen a slight pickup. This obviously is very important for the UK economy because of the squeeze that's been apparent for UK households, where the prices of goods has actually eased. Inflation fell from 2.7% to the lowest it's been in several months, whereas wages has picked up to the highest it's been in a number of months. So the disparity in the cost of living, if you like, has improved, i.e. it's still negative real wage growth, but it has, the gap converged instead of diverging, which has been the pattern since really the last 12 months. Other things are as well, is that it confirms most people's view on pay growth in the UK, which is expected to benefit from an increase in public sector pay, the national living wage, and an increase in private pay settlements. This is all part of the agenda of the Tory government from what their previous commitments had been. So the wage growth pickup, that's also helped elevate the pound. Then you had what really wasn't so much a pound situation, but this section here, this was when we had that reaction and the sell-off in the dollar on the back of what was not so much dovish FOMC, but I'd say not as hawkish as some had thought on the dot plots, i.e. the rate trajectory in the US, and so dollar weakness helping cable break that previous high that we had on Monday. So if I remove that technical point and the breach, helping get back above. Then we had the Bank of England interest rate decision, so it has been a particularly busy week. That was a surprise, that momentary blip that we had for the weekly high, which was printed, well, we're looking here at 142.72. That came because of the 7-2 split. So Michael Saunders, Ian McCafferty, of course, dissenting against the majority and looking for an immediate rate hike. However, the actual narrative from the minutes doesn't really change the game too much, albeit the Bank of England are on track for a May interest rate hike. All things being equal, no breakdown in the political arena, though, is to be monitored. And so if you actually look at the strength of the pound throughout the week, what was quite a pivotal week for the pound has ended up being a really strong one. We've gone from basically sub a 140 handle all the way up to near a 143. Crisis averted. For the near term, what does Theresa May get? She gets a little cheeky peck on the hand from Monsieur Barnier, and so Theresa can smile for now. The show rolls on, and one thing I'd say is that this week she's also caught a bit of a break on the back of the fact that financial markets have been very much sidetracked by not so much the Brexit situation, and granted this is a short-term reprieve in the agreement that's been struck, but I'm just keeping an eye on US equities here as we go into the close of this week's trade, and it's been a really quite a big week for US equities to the downside. Looking at the S&P here, this is the Nasdaq, and then the Dow Jones as well, breaking the key levels. So we're at the lowest points that we've been now since really the middle of February, as Donald Trump continues to shake up the world's, I guess, concerns over an escalation in their protectionist stance and the trade deals with foreign countries. So that's it for the moment on Brexit. More to come, I'm sure. I'm going to put out a research piece next week. So I'll catch you then.